everything is crashing. Everything. Literally everything. It doesn't matter, which stocks, which sector, everything is down red. So there is what is actually causing this huge market sell-off that we had today, because yesterday the market seemed to react in the positive in the news of the Federal Reserve increasing interest rates, meaning they are committed to fight inflation. So what happened suddenly for this huge turnaround, losing pretty much all the gains based of the news of the Federal Reserve yesterday, and then a lot more on top of that. Let's dive exactly into the details and what it means for you as an investor and what you should do next. All right. So looking at the price action of the main US indexes today, everything red. I mean, look at the Dow Jones down 2.4%, S&P 500 3.2%. Nasdaq at some point was flirting with the 5% down. This is a lot. This is a lot. So what is actually happening here? Well, you have a lot of influential people. You have a lot of people, the veterans, the experts, the pros, the billionaires that are having a negative sentiment into where the economy is headed. Look, for example, at this one, veteran Novogratz. The economy is going to collapse. We are going into a really fast recession. That's number one. Number two, US inflation expected to keep running hot. Traders are now seeing the 4 next straight months of a roughly 9% of higher in terms of inflation when it comes to the CPI. So that's July, August, September, October. And this is not shocking to me because I've been saying this now for quite some time. As long as oil is expensive, is pricey, everything else should be pricey unless people stop buying stuff. And that is not going to happen because we need to live. All right. We need to live. Even though oil has been retracing for the last 2-3 days, I still believe it's heading towards, that 130, 140, maybe 150, in the next coming months. Now, when you hear a lot of these things, all right, it creates what? It creates negativity. It creates a lot of fear, uncertainty, doubt. People are uncomfortable. People are, having a bearish sentiment. And that ultimately creates a huge selling pressure like the one we saw today, resulting into pretty much, everybody wants to get away. Everybody go into protecting mode. I need to hold on to some cash and maybe hold on to some commodities. Maybe that's why gold and oil are the only assets. I mean, the main other assets that are green today, because even cryptocurrency, it's still crashing hard. All right. So does that mean that everything is now gloomy and doomy? No, I don't think so. Why? Just because the economy is not going to zero. And recessions are part of a cycle of the economic cycles. We ran hot, really, really hot based on what happened back in, the COVID-19 situation, where not only we pumped a lot of money into the system, into the financial system, into the economic system, but also we had people locked down for almost 2 years and they couldn't pretty much do whatever they needed to do freely. So that ultimately will have caused high inflation. And when you have high inflation, at some point, the economy will cool down because it's not sustainable. All right. Another thing I want to look forward to as an investor is this other article I already shared with you a couple of times ago now. Those who buy stocks the day the S&P 500 enters a bear market have made an average of 22.7% in the next 12 months. This is data based. This is fact based. Looking at the historical data, if you buy the S&P 500 right after it hits bear market territory, and I do believe the S&P 500 is now down 23% from the highs of December 31st of last year. So this will happen gradually as we see inflation cool down a little bit, and a little bit. So as an investor or a swing trader, not much of a day trader, but as an investor or a swing trader, this presents opportunity, because when there is a huge sell-off based on news like what we had today and what happened today, even good quality companies stocks are being hammered. because all of these companies like the energy sector or the Teslas or whatever, the Apple, the big tech, they are still going to produce cash flow. They are still going to be profitable. Now, people are pricing the fact that earnings are going to be a lot less higher than they anticipated. But as of now, I think with the market retracing, that should be pricing, and I think we're going to have a relief, bounce based on those quality stocks where people are looking for in order to either have that passive income in form of dividends, or where you have companies that are already committed to a buyback stock program. So companies are buying their own stocks in the form of supporting, the growth of the money of shareholders. So these are the companies you want to be involved and invested into. Now, if you don't want to get into individual stocks at all because you don't have the research, the analysis, you don't want to spend time, you're afraid, you're doubtful, well, just buy an index fund. VOOO, VGT. VGT stands for technology, and the VOO stands for the entire market. You can also buy just the value stocks, that is the entire S&P 500, just without the technology sector. That will be VOOV. I'm investing in all three pretty much on a monthly basis. And in my long-term investments, every 2 weeks, I'm still investing 10% of my income into the long-term investments, which is a good mutual funds that are supposed to return 13, 10, 12, even 15% annually. And then I still have my kind of swing trade where, of course, I've been hammered today, but I'm still holding on to those because I selected my companies and my stocks carefully based on the criteria I just shared with you earlier. So to me, well, this was expected because 75% basis points it's kind of a lot, but it's not a lot, which means to me, which tells me that we might see, a bounce, maybe a quick bounce, if not tomorrow, the next coming week. Keep in mind that the market is closed on Monday. So that is it, folks. Let me know what you think, what companies, what sector you're exposed to when it comes to, how you want to play this whole recession thing, and we'll share in the comment section. See you in a bit.